Welcome back, everybody. We got a great one for you today. We're going to be looking at some information, new update from Jeremy Hogan, and hear his opinions and thoughts on the latest from the SEC. You're going to want to know about it. Ripple and IPO, Ripple and hiring for very, very important positions, and I find them to be very revealing at the same time. And it's the kind of stuff I like to know about when you see the market currently falling like a manhole cover from the sky. Let's just go ahead and roll that beautiful intro. Here we go.
This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back to the show. You can follow me on Twitter at BackupBradleyAbove and everything that we're talking about here today. And I wasn't kidding. $1.5 trillion for the cryptocurrency market cap collectively, really $1 trillion missing from the market. We have been at a $2.5+ trillion cryptocurrency market cap at our strongest, at our peak, and now more than $1 trillion missing from that market cap. So no wonder the market is really bleeding heavily. By the way, blue light special in the crypto section. Not financial advice, but I can tell you that real wealth is made by buying the dip and buying the market when it's actually down. Now, which one of the 10,146 cryptos do you buy to really experience the gains? Well, that's what we all have to figure out on our own. For me personally, XRP is one of them. Again, not financial advice. Looking right here, we're 84 cents. We are ranging between 83 cents and 93 cents now. Look, just moments ago before hitting the record button, we were at 87 cents. I watched it just drop 3 seconds, and you know how Fiat Links hit you with like the cannon bomb or the thunder or whatever they call it. And that's either when the price is moving up or moving down, and it dropped 3 cents just like that. So seeing a huge sell-off in the market, I'm always reminded, that's why I like to talk about the overall cryptocurrency number for market cap, because we see that there is 100 billion or more missing just from yesterday. Right. So it doesn't really, it doesn't confuse me as to why the market is off more than 7% this morning for cryptos broadly. So plus we're going to look at some other news that really makes it a little easier to understand too, I think. This is from a Hall of Famer, Bond Crypt XRP here. Dogecoin's growth comparable to Ponzi scheme, another Bernie Madoff-like big lie in the making. Its small mining pools makes it vulnerable to fraud. Critics claim Dogecoin is mutable and one holder could bring the value back to the ground. I'm just going to read this to you right here because Bernie Madoff was obviously a guy who died this past year while being sentenced to 150 years in jail after ripping people off in the conventional stock market, and was basically bringing on more customers to pay the old customers, one-on-one Ponzi scheme, but to the tune of $65 billion being lost. The dog on Dogecoin was a joke. So any of you out here holding it, you are absolutely holding what is really the classic definition of a Ponzi scheme. The greater fool theory, if you will. You're a fool who bought it, and you're hoping there's a greater fool that will buy it from you at a higher price. Now, make no mistake about that. That's the truth until you see use case utility brought to the actual project, to the token. And that can be found in the way of partnerships, right? If you do not have any of those things, you do not own anything but the image of a dog on the Dogecoin, which actually is digital, so you can't even see it. So, there it is. You own a meme is what you own, right? Unless major economies decide to adopt cryptocurrencies in a big way in the mainstream fiscal or monetary policies, the joke will continue to play on, and it's on you if you're holding it at a lower price that you bought it for. In the wallets of millions of investors looking for a quick return, while the early investors feed on the newer ones, it may not be unreasonable to expect another big lie revelation in the future. Well, this can also be said and speak to the manner of what we've heard from Gary Gensler of the last week or two in the few times we've heard him speak from the testimony he gave in the House Financial Services Committee. He talked in there about there needs to be more consumer protection from within the exchanges for protecting the retail investor, right? Which is necessarily not a bad idea, depending on what that may be. However, I think this is as fine an example, and it may become the example and be the whipping post for setting an example for the crypto space. We will see. Bond Crypt says here again, Bitcoin slumps as traders brace for volatile long weekend. That's for sure. We got evidence of that just moments ago, right? So digital tokens took a hit as Bank of Japan governor joined a growing list of central bankers expressing skepticism about the industry's usefulness in the real world. Again, fudding Bitcoin and crypto. Look, if you can manipulate Bitcoin dominates the pace of the crypto market, like it or not. And if you can manipulate this one asset, you can control the actual flow of the market, generally speaking. More than 10,000 plus coins are going to go with it. So at the end of the day, I have talked about this more than a year, probably a year and a half, 2 years ago on the show. Myself, I know Spencer H., shout out to him and his family, and a handful of others believe that Bitcoin is really controlled. When they talk about whales that can control the price of Bitcoin, I believe those whales are really behind those whales are governments. And it could be the 3-4 biggest governments of the world, China, the US, right? It could be UK involved, Japan as well. But the reality here for me is that even though that's my speculation, and I do believe that is highly possible, one of the reasons I believe that's highly possible is because we know Chris Giancarlo, after serving as the head of the Commodities Futures Trading Commission, the CFTC, had told us after his tenure there that the U.S. intentionally introduced the futures contract on Bitcoin as it was approaching $20,000 at the time, so they could pop what he called the bubble. And that right there is one example of how a major country, can participate in being able to manipulate the one coin that caused a crash for the whole market. So just an example there. Now, moving on here, I do want to keep this moving. So there's Doge, there's that with the Bitcoin. You see the market is being fudded and held down, right? Just a little public service announcement here. Poloniex, however you say it, shuts down the XRP wallets for maintenance for the second time this week. It does appear to be normal maintenance. I just wanted to alert people that they had made that actual post. So here we see a real push for Cardano Summer. And what they're talking about here is and I went through the article, I'm not going to read you the whole thing, but is the growing applications that are launching on Cardano and the new test launch of the smart contracts, which is coming to Cardano as well. This could set the stage for a huge explosion for this network and this token. Not financial advice. I full disclosure, I do hold a little bit of Cardano. Not as much as I did back in the day, back in 2017, but I do hold some still. And shout out to Charles Hoskinson. I do believe he is one of the great pioneers of this space here. Indian bank HDFC predicts legal access to crypto. Now, if you've been in this space for any length of time, you understand that India has been on and off like a bad tennis match when it comes to cryptocurrencies. What I believe here is exactly what they say, that the chief economist feels the cryptocurrency regulation in India will be favorable to investors. The report reiterates plans of a central bank digital currency launch. Well, I'll be damned, right? This goes to what we've talked about in the narrative that we see developed here for the last several years, or at least a handful of years. And it is the idea that the market is being suppressed in manners of the ways that I just covered a second ago, into the idea of understanding that, until we get central banks launched broadly around the world to be able to become the on and off ramp for the market. This is the one and only Jeremy Hogan, Legal Briefs. Shout out to you. You're a Hall of Famer. And let's go ahead and take a look at just a couple quick clips here. You should watch the whole thing because he's amazing. And I'm just going to give you the highlight here. It's the first 2.5 minutes or so where he talks about his prediction on the motion coming from the court potentially here on the fair notice defense from Ripple. Let's listen right here.
In the Ripple case, right away, the SEC moved to strike the fair notice defense, to remove it from the lawsuit completely. Now, Ripple has responded to the SEC motion, and now the SEC has responded to Ripple's response. So that's where we're at. Now, understand that a motion to strike a defense is difficult to win. The SEC has to get the judge to agree that even if everything in the defense pleadings is true, there is absolutely no way that Ripple can win. It's a very high standard. So, what is the SEC's argument? Now, let's take a look. Its main argument seems to be that Ripple cannot even raise a fair notice defense. Quote, Ripple hangs its hat entirely on Upton, even though Upton has never been applied to negate violations in a SEC district court action, nor has any court allowed an Upton defense to defeat SEC charges of statutory violations, such as Section 5, as opposed to the SEC's novel interpretation of its own rules, as was the case in Upton. So the SEC is trying to distinguish the Upton case and say it doesn't apply here and you cannot have a fair notice defense in a Section 5 violation case. But that's not the way the law works, even in Chicago. Just because a rule of law hasn't been applied in a specific situation doesn't mean you can't raise it. For example, you all know what the self-defense rule is. I punched you because you were punching me. Now, the rule of law is that you can reasonably defend yourself from attacks. Now, let's say that instead of being punched, let's say a stranger walks up to you and tries to kiss you, and you push that person away from you very, very hard, and you are arrested. Now, you can still raise the defense of self-defense at the pleading stage. You might not win, but you can raise it, and a motion to strike that defense will be denied. Just because no one has ever raised it before in that exact circumstance doesn't negate the defense. And I think the SEC kind of knows this. And so what it does later on is it argues that there's case precedent that states that a fair notice defense cannot be raised in this exact situation. It cites to the Kick Interactive case, which was a case from 2 to 3 years ago against a crypto company called Kick Interactive. And this is what the SEC says. Quote, indeed, Judge Hellerstein recently evaluated an Upton defense based on facts materially indistinguishable from those alleged by Ripple and found the defense to fail as a matter of law. Close quote. Uh-oh. That's legal jargon for oh crap. Lucky for us, I have read all of the Kick Interactive pleadings, and this is just not true. In fact, I just pulled it up on Court Listener to show you. Right there at entry number 26, you can see that in the Kick Interactive case, the SEC also filed a motion to strike the defense. In this case, it was called a motion for judgment on the pleadings. And if you go down to entry 29, you can see that the judge denied the motion without prejudice. Now, the Kick Interactive judge eventually did rule against Kick on the issue, but it was not on the pleadings, but later at summary judgment. And that's where I also think Ripple's fair notice defense will be decided. Prediction, motion to strike denied. But
there you go. And let's listen here, right here at the tail end. He hits us with another little spot here to catch the rest of this piece here.
In his judge assignments. In any case, one more super important thing I want you to understand about the fair notice defense. I think Ripple's argument that its sales of XRP were not a security are stronger than its fair notice defense. But I think the fair notice defense might be more important, and here's why. The US follows the rule of stare decisis, meaning that rulings from upper courts control the lower courts. The Kick Interactive case is from a same level court, so it's persuasive authority, but it's not binding. If the ruling was from an appellate court, which is a higher court, the ruling would be binding on the Ripple court, which is a lower court. So if Ripple wins on the fair notice defense, it becomes persuasive authority for any crypto company the SEC sues from this point forward. If the fair notice defense survives and Ripple wins, the SEC is going to have an uphill battle winning any other lawsuits they bring. But wait, it's even bigger than that. Listen to this. Even if Ripple loses the fair notice defense, they can appeal the ruling. And if an appellate court determines that Judge Torres was wrong and Ripple did not have fair notice, then the SEC is now really in trouble because that ruling is binding on every crypto lawsuit that comes along. For the most part, the SEC will not be able to bring any more crypto lawsuits, and the SEC is funded by the fines from these lawsuits. So if that happens, well, read between the lines. So the fair notice defense is the main thing right now. It's the thing that is applying pressure to the SEC. It's pressure that's the key. It's the defense that the SEC is most worried about for good reason. And it's the defense that could potentially save the industry from the SEC. And it's the defense that would lead to the case settling or resolving before a hearing on summary judgment. Pay attention to what happens to it. The other stuff that's going on is important, but this is the issue to watch.
And that's it right there. And thank you to Jeremy Hogan, no doubt. And I hope you have a great weekend, my friend. All right, so now let's keep moving because we know, as a reminder, Brad Garlinghouse just told us from Consensus that there is plans to go public after the SEC lawsuit is over and XRP is resolved, the CEO says. The likelihood is very high at some point. He further pointed out that the securities regulator will be the one approving the Ripple public offering after all. And that really is the irony of all of this, is that once we get this settled, they're going to have to go back to the SEC and file for the IPO. Oh, that must be a tricky visit. But at any rate, let's keep this moving because I do believe they are going to find their way to a settlement, whichever way it goes. However, I will say here, this is a shout out to the XRP holders who took part. And I had no idea that they were doing this, but this is pretty cool that they did this. And they went to the U.S. Securities Exchange Commission headquarters in Washington, D.C. on Friday to protest the agency's lawsuit against distributed ledger technology company Ripple. And shout out to all of them that protested in front of the SEC. Hey, whatever we can do to shine a light on it. And that's a pretty damn good job right there. So hats off to them. Ripple is headhunting for a recruit who can take charge of its efforts to bring the XRP ledger to central banks and to the emerging world of decentralized finance. All right, now let's drill down into this because you're going to want this. Ripple is headhunting for a recruit who can take charge of its efforts to bring the XRP ledger to central banks and the emerging world of decentralized finance. The San Francisco-based payments company is hiring a product marketing manager to spearhead its strategy for tokenization. The new hire will determine the best ways to capitalize the XRP ledger's ability to let users mint unique digital assets that can be used by central banks and for non-fungible tokens, NFT projects. This person will meticulously focus on helping Ripple win the massive opportunity, market sizing, competitive analysis, customer segmentation, and other go-to-market planning will be a part of the role. Candidates should enjoy solving complex problems, rapidly formulating a clear point of view. This person will not just execute, but also be involved heavily in strategizing and analyzing. It says here, another job post shows the company is looking to see how the XRP ledger could be used to power decentralized financial applications, which is going to be enormous for the entire crypto space. The senior manager for business development position pursued partnerships, investment opportunities in cryptocurrencies, NFTs, stablecoins, and DeFi apps. I wanted to read this here. Ripple opens the position as it anticipates over 10% of the global gross domestic product to be stored on the blockchain by the year 2027. So in 6 years, they see 10% of, let's call it $87.55 trillion is what they have here for the number I could find. So $87.55 trillion puts us at what? Is it 8.7 trillion? It looks like to me, if my math is right there. So that's a pretty remarkable number in the next 6 years, moving its way to blockchain. And obviously a portion of that they see moving to the ledger, right? So, all right. Now, with that being said, let's take a look at this because I wanted to show this from Trader's View. And it says, take a look at what's been getting accumulated the last 12 months. No, not Ether. No, not Litecoin. Not Bitcoin. XRP, baby. Take a look at this. And shout out to Trader's View for this. And what a great metric this is here. It's showing that for Litecoin, the number has gone down for accumulation, right? It's showing here for Bitcoin, the number has actually fell off too. And it's showing here, and it's actually coming here almost like it didn't quite reach that low, but still there, and look like it's turning around a bit there for Bitcoin. And then Ethereum has actually been falling off as well. And then look at XRP. Well, would you look at that? Look at this. That's the accumulation metric he's sharing with us. That's pretty remarkable. Sounds like to me people are understanding XRP a lot better than it is being portrayed by some, right? And that is incredible to see that. And I shout to you, Trader View. But maybe that's why the Joker here is telling us that he sees an XRP $3 per XRP incoming in our near future. This is pretty remarkable. All right. So, and he reminds us here, he said, I had this chart and shared it here since it was 17-cent levels. So patience, let the market do its work. And it's really well said here by him. I want to just show you this here. And this is what he's seeing. If you just take a look at it here, you see this right here moving on up. And seeing 331 is where we're headed here. So we're going to keep an eye on what's going on here. I do want to remind people that even though we are in the 85-cent range, that 85-cent range, 75-cent range, 65-cent range, they are all areas of support. So if the price rolls down below 85, we would look for the 75-cent range to pick up as support. If it blows through that and continues lower, we should look for 65-cent support, right? So those are the things to pay attention to this weekend. And if we stay within those things, as I understand the experts, then everything on the upside for price targets, the 272, 331, $5 plus, 1333, $27 for XRP are all very much still on the table. That's going to do it for me. Make sure you hit the like and subscribe and leave a comment below. Share with somebody you know and hit that notification bell so you don't miss a thing. Remember, unstoppable domains. They are unstoppable. Make sure you get your .crypto today. I'll catch all of you on the next one.